In this month's commercial real estate recap, I'm going to talk about deal volume because you may recall that about 2 months ago, when our data covering the first quarter came out, we highlighted how geopolitical uncertainty and the resulting continued very high interest rates had pushed investors and lenders back to the sidelines. We had talked about how the improvement we had been seeing earlier in buy or sell recommendations or postures, had shifted back down, and the hold option had once again become stronger. Simultaneously, we had highlighted that investors were reporting that on both the debt and the equity side, capital was becoming more constrained, and discipline was becoming tougher. So here we have, a couple months later, the latest data from MSCI Real Assets on transaction volume. And CRE transaction volume plummeted in April, down 55% to its lowest level in 2 years. So this really brings home the concept that as the investors have moved to the sidelines with their hold, transaction volume has fallen in response. All four major sectors were down on both a monthly and yearly basis. Office experienced the smallest decline, down 38% over the month and down 15% over the year. Multifamily fell 53% to its lowest level since COVID. And retail and industrial activity was the slowest in over 2 years, and office was its lowest in a year. All four sectors are well below their long-term averages by 40% or more. With the continued volatility in 10-year Treasury rates, as the news from about the likelihood of opening up the Strait of Hormuz and oil prices coming down or not goes back and forth, we continue to see this movement intraday, day to day in interest rates. But in the end, the continued uncertainty regarding that whole situation and the continued high interest rates that have resulted are keeping CRE from seeing a rebound in transaction activity.